Welcome back to Investing Talk Podcast.
Good to be back.
Today, we're taking a closer look at a name that's been getting some attention in the cannabis world, Aurora Cannabis, ACB.
That's right. We've got a fair bit of material here. Recent reports, market data.
And our mission really is to sift through all that for you, our listener. We want to pull out the essentials.
We'll unpack the latest financials, look at what's driving the business, the industry context, and importantly, the risks involved.
There's this narrative, this talk of a big turnaround. We need to understand, what's really behind that. Is it solid?
And keep a critical eye out for any, let's say, potential red flags or things to watch. This is really about getting you the core information from what we've seen.
Exactly. Giving you a clearer picture of where ACB stands today. We'll look at the numbers, the strategy, the market forces.
All the key pieces.
Okay, let's get into it. Financials first. Where do we start?
Let's start with the top line, revenue. The reports focus on Q3 of their fiscal 2025.
And the number.
Net revenue came in at $88.2 million.
Okay, and how does that compare?
Well, compared to the same time last year, that's up 37%. So a pretty significant jump.
37%. Yeah, that definitely catches the eye. What's powering that growth?
It seems mostly driven by their global medical cannabis business. That part hit a record, actually, $68.1 million in Q3.
A record. Okay.
Yeah.
And growth rate there.
That segment was up 51% year over year.
Wow.
And even more striking, within that, the international medical part, that more than doubled, up 112%.
Doubled. So international is becoming really central.
It appears so. International medical now makes up something like 60% of their total global medical sales. It's the big shift in where the money's coming from.
So this isn't just like a one-off good quarter then. It sounds more strategic.
That's what the information suggests. It looks like the result of a deliberate focus over the last, say, 3 years on these global medical markets, specifically, and also building up their plant propagation business. This pivot seems to be giving them more consistent revenue growth, unlike, the ups and downs they had before when they were really deep in the Canadian recreational market.
Right, that market's notoriously tough. Okay, so revenue's up strongly. What about profitability? Earnings per share, EPS?
Big swing there. Q3 fiscal 25, they reported positive 141 cents per share.
Compared to
a loss of silly 20 cents in the same quarter last year. So quite the turnaround on paper.
And how did that stack up against what analysts were expecting?
Apparently it blew past estimates. The reports mention it beat expectations by over 900%.
900%. That sounds almost too good to be true.
Well, it's definitely a headline grabber. But there's a bit of a counterpoint flagged in the reports, too.
Oh.
The consensus estimate for the next quarter, Q4, it's currently looking like a loss, around $1.60 per share.
Okay. So that suggests maybe some volatility ahead or perhaps some one-off factors in this past quarter's big number?
Could be. It signals that analysts aren't necessarily expecting this level of profitability, at least on the EPS line, to continue smoothly just yet.
Let's dig into that profitability then. Net income specifically. What was the number?
Q3 net income was reported at $31.2 million. Again, a huge improvement from the $18 million loss they posted the year before.
Okay, $31.2 million positive. But you mentioned potential one-off factors. Does the material point to anything specific there?
It does, and this is really important context. That $31.2 million figure was heavily boosted by a one-time gain.
A gain from what?
From changes in the value of their biological assets, essentially the accounting value of the plants they have growing.
Ah, okay. Not from actually selling more products.
Correct. And this gain was substantial, reported at $31.6 million.
Wait, $31.6 million gain? And then net income was $31.2 million.
Precisely. The one-time gain is almost the entire reported net income figure.
So stripping that out, the actual operations maybe weren't that profitable on a net income basis in Q3.
It strongly suggests that the underlying profit from their core business of selling cannabis and propagation wasn't the main driver of that positive bottom line. That gain is really key to understanding the headline number.
Okay. That's crucial context. And it makes you think about valuation, right? Like the P/E ratio. With positive earnings, they might actually have one now.
Yes, with positive trailing earnings, a P/E ratio becomes calculable, which hasn't always been the case for them or many in the sector. The reports don't give an exact live figure, but they do mention a trailing P/E being cited around 92.
92? That sounds quite high.
It is, especially considering P/Es in cannabis can be all over the place, often negative. And given we just discussed how that trailing net income was propped up by that one-time gain.
Right, that 92 times earnings might look very different if you adjust for that gain. It sounds like a potential valuation risk, maybe.
That's certainly how it's framed. If future earnings don't grow substantially from operations to sort of grow into that multiple, it could look quite stretched once that one-time effect is further in the past.
Okay, let's switch gears to the balance sheet. Debt used to be a big issue here, didn't it?
It absolutely did. High leverage was a major concern for years.
And now, what do the reports say?
This is highlighted as a major positive. The company is stating it has a debt-free core cannabis business.
Debt-free?
In the core cannabis operations, yes. And they also report having $180 million in cash on hand as of the end of Q3.
Wow, that's a dramatic change. So their debt to equity must be very low now.
Extremely low.
Yeah.
Effectively near zero for the core business. It's a significant improvement in their financial health and stability.
That's a big positive. What about free cash flow? That's the actual cash generated, right? Investors watch that closely.
Yes, and this is another key highlight pointed out in the materials. Aurora generated positive free cash flow in Q3.
Positive. How much?
$27.4 million generated in the quarter.
Okay, and is this the first time?
The reports emphasize this is the company's first sustained period of positive free cash flow, actually generating cash from operations.
That's huge. In this industry, cash burn has been the norm for so long.
It truly is. Achieving positive FCF is a significant milestone and definitely sets them apart from many competitors who are still burning cash.
And return on equity, ROE. Anything mentioned there?
Not specific figures, no, but logically, with positive net income, even with the caveat about the gain and effectively no debt in the core business, ROE should be improving.
Makes sense. Though maybe still weighed down by losses from past years.
That's likely. Accumulated historical losses would still factor into the equity base, keeping the ROE from looking perhaps as strong as a mature, profitable company. But the trend should be positive.
Okay, let's step back from the numbers. How does ACB position itself? What's their niche, according to this material?
They're positioned and seem regarded as a leader specifically in the global medical cannabis space. The emphasis is really on their operations outside North America.
And that international growth number we talked about supports that. What gives them an edge there? It seems like a complex market.
It is complex. The reports suggest their advantages include strong global brand recognition. That helps.
Okay.
Also, crucial expertise in navigating different countries' regulations. That's a high barrier to entry. Each country has its own strict rules for medical cannabis.
Right, compliance must be a nightmare.
Definitely a core competency needed. Plus, they have a diversified portfolio, including that plant propagation business we mentioned, which itself grew 22% year over year.
So they're really focused on being a sort of pharmaceutical-grade supplier in these regulated international medical markets.
That appears to be the core strategy. Higher regulatory hurdles, yes, but potentially better, more protected margins compared to the really competitive recreational markets, like Canada's.
What about the bigger picture, industry trends and risks that affect them?
On the growth side, it's things like more countries legalizing or expanding medical cannabis programs. That increases demand for the kind of products Aurora supplies.
International expansion is key for them.
Absolutely. And strategic partnerships they've set up overseas. Plus, the growth in their plant propagation segment adds to their mix.
And the risks. Still regulatory uncertainty.
That's paramount. Both navigating the patchwork of international laws and the whole ongoing question mark around U.S. federal legalization, which could impact things indirectly or directly down the line.
What else? Price pressure.
Price compression is still a factor, especially in recreational markets. But Aurora's shift away from Canadian rec lessens their direct hit from that.
Yeah.
Supply chain issues are mentioned, but maybe less critical than, say, a couple of years ago.
Got it. Who's steering the ship through all this? What about management?
Miguel Martin is the CEO and executive chairman. He came into that role in late 2020 or early 2021, around that time frame.
And how is his tenure viewed in these reports?
Generally positively, in terms of executing the strategic shift, he and his team are credited with refocusing the company on profitability. Through cost discipline, mainly, and that aggressive push into international markets, this pivot is seen as leading to those milestones like positive adjusted EBITDA.
Right, you mentioned that measure. What was the Q3 number again?
Adjusted EBITDA hit a record $23.1 million in Q3. That was up over 300% year over year.
Okay.
And, of course, achieving that positive free cash flow ahead of schedule is also linked to this management strategy. The reports also nod to other executives having relevant pharma and cannabis backgrounds.
Any mention of insider trading? Insiders buying or selling shares?
Nothing specific highlighted in the public material we reviewed. For that kind of detail, you'd really need to check the dedicated regulatory filing databases.
Okay, so thinking like an investor. Valuation and risks again. We touched on PE. Anything else? Price to book? Dividends? Beta?
Price to book isn't given a current number, but historically it's been low, sometimes below book value. Dividends? No, that's typical for the sector. Beta, which measures volatility. Also not specified currently, but historically high, over 1 p/BNO, reflecting the sector's choppiness.
And summing up the key risks again, beyond just valuation.
Regulatory remains number one, both internationally and the U.S. federal situation. Supply chain is still there, but maybe less acute. Market oversupply risk is seen as lower for them because of their strategic shift away from Canadian rec.
And no major lawsuits flagged recently.
Not disclosed in the materials we looked at, no.
So it feels like the whole sector is still kind of waiting on bigger regulatory moves, especially in the U.S.
That's a fair assessment.
Yeah.
The slow pace of U.S. federal reform definitely casts a shadow and impacts investor sentiment across the board.
How does Aurora look compared to some of the other big Canadian players, like Cannabis Growth or Tilray?
Well, the reports definitely position Aurora as standing out right now.
In what way?
While some peers are still reporting significant losses, dealing with debt, going through restructurings, or integrating complex past deals, Aurora has managed to return to profitability, clean up its balance sheet, that debt-free core op is key, and hit positive free cash flow.
That positive FCF seems to be the big differentiator.
It's highlighted as such. Compared to, say, Cannabis, which reports suggest is still unprofitable and restructuring, or Tilray, which is also reporting losses despite diversifying, reaching positive FCF puts Aurora in a different financial position based on these recent results.
What about recent news or events? Anything investors should be aware of?
Well, obviously those Q3 results back in February were a big driver for the stock's rebound this year.
Right. More recently.
There was a routine SEC filing, a Form 6K, on June 3rd. Standard stuff.
Anything coming up?
Yes, a big one. Their fiscal year-end earnings call is scheduled for June 18th. That's when they'll release Q4 and full-year numbers.
So that'll be key to see if the Q3 momentum carried through.
Absolutely. Investors will be watching that very closely. Also, they were at an investor conference, the TD Cowen Consumer Conference, on June 3rd, showing they're talking to institutions. And back in March, they were involved in a global cannabis regulatory summit, which underlines their focus on international policy.
Okay, and how's the stock price actually behaved amidst all this?
As of mid-June, around June 13th, it was trading about $5.85. It's been fairly stable recently, kind of bouncing between, say, $5.78 and $6.07 over the last month or so.
Not too choppy lately, then.
Not in the very short term, no. Seems like maybe some stability before that June 18th earnings release.
But longer term, how's the performance looked?
Well, looking back over 6 months or so, it's had a significant run-up, about 46% gain year-to-date in 2025. This comes after some really tough years, of course.
And the range?
The 52-week range mentioned is $3.42 up to $7.20. So it shows volatility, but definitely a recovery from the lows.
What's the general feeling among analysts and on social media, maybe?
Analyst consensus seems to be holding a hold. So acknowledging the progress, the turnaround signs, but still cautious, perhaps because of the past volatility or the sector risks.
Not a screaming buy, but not a sell either.
Pretty much. It wasn't flagged as a top algorithmic pick in the material either. Social media sentiment seems mixed, some cautious optimism before the earnings, but also skepticism. People wondering if these results are sustainable. A lot of wait and see for the June 18th numbers kind of talk.
Makes sense. Okay, before we summarize, just a quick note for you listening. If you're finding this deep dive valuable, please do consider subscribing to the channel, giving us a like, or leaving a comment. We really appreciate the feedback.
It helps us know what you find useful.
And if you're feeling extra supportive, you can even buy us a coffee through the link in the description. It genuinely helps us keep doing these analyses.
We appreciate any support.
Okay, so let's tie this all together. What's the overall picture of Aurora Cannabis based on everything we've discussed?
I think the main takeaway is that there's undeniable progress shown in these recent reports. Revenue growth is strong, driven by that international medical focus.
Margins improving, balance sheet looking much healthier, that debt-free core business is a big plus.
And hitting positive free cash flow, perhaps the most significant milestone recently. That really does make them stand out compared to many Canadian peers right now, based on this information. The turnaround signs are there.
But, there's always a but, isn't there? That hold rating suggests caution. Why?
Well, the caution seems rooted in a few key things we hit on. First, that headline Q3 net income heavily relied on the one-time biological asset gain. So the underlying operational profitability needs to prove its consistency.
Right, sustainability is the question.
Exactly. Second, the valuation, especially that trailing PE of around 92, looks potentially stretched if you mentally adjust for that one-time gain. It needs future operational growth to justify it.
And the ongoing risks.
The regulatory landscape globally is still complex and evolving, and there's always execution risk. Can they keep delivering on this strategy and maintain this positive momentum? A lot really does ride on the next few quarters, starting with those June 18th results.
Okay, that makes sense. So progress, yes, but still things to watch very closely.
That seems to be the consensus view from the material.
All right, let's leave our listeners with a final thought, something to chew on.
Okay, how about this? Aurora has clearly bet heavily on international medical markets, and they're actively trying to influence global policy reform.
Right.
So consider how the pace of global cannabis legalization, if it speeds up or if it slows down or stalls, might uniquely affect Aurora's path forward, maybe more so than companies just focused on, say, the North American recreational scene.
That's interesting. Their fate seems really tied to that specific global trend.
It's central to their story, something to think about as you watch the space.
Excellent. Well, that wraps up our deep dive into Aurora Cannabis for today.
Thanks for tuning in.
We hope this was informative. Keep exploring, stay informed, and we'll catch you on the next Investing Talk podcast.